Good afternoon, everybody. Welcome to part 3 of the home buying presentation webinar of the spring presented by Affinity Federal Credit Union. Today's topic is the process, part 3. My name is Oscar Cordova, and I'm the External Affairs and Financial Education Manager here at Affinity. I'm in charge of the financial education efforts of the credit union focused on the areas that we serve. Before we begin, I would like to go over a brief disclaimer. All of the information provided to you this afternoon is intended for informational purposes only. It is not intended to be legal, tax, or financial advice. Each person's circumstances are different, and if you want to speak with a professional about a certain situation that is going on, and you want to speak with a professional, feel free to reach out, and I'll be more than happy to put you in touch with one. Since this is a home buying presentation, if you would like to have a one-on-one conversation with a mortgage loan officer, through the presentation, Carolyn, who is our presenter, and I will be sharing different resources where you guys will be able to get in touch with a loan officer that can actually help you with your home buying journey, okay? Our presenter today, her name is Carolyn Morgan-Besser. Carolyn is our AVP of Mortgage Originations. She leads a team of 18 mortgage loan officers who work diligently to provide the best experience for our members. Carolyn has been in the mortgage industry for over 35 years, and she loves assisting members with achieving their dream of home ownership. As a reminder, this webinar is being recorded, and the link to watch this presentation again will be shared with all of you in a follow-up email that will be sent in the near future. Most probably tomorrow, if not definitely Friday. Also, if you have any questions that you would like to ask during the presentation, feel free to use your Q&A option on your panel, and Caroline will be more than happy to address them at the end of the webinar. As a final note, I will also be sharing important links throughout the presentation in the chat, and these links are meant for you to access important information about the home buying process, as well as other valuable resources Affinity has made available with your membership. With that said, I'll turn it over to Carolyn. Carolyn, thank you so much for joining us this afternoon.
Thanks, Oscar. Welcome, everyone. So we're going to jump right in. Next webinar is going to be June 7th, and that is credit and what you need to know. So there's a lot of people involved in your home buying process. In addition to yourself and your mortgage loan officer, you're going to be working with a couple of different realtors. The selling realtor or buyer's realtor, that's the realtor that shows you the home. Hopefully you'll be taking part in our Home Advantage program, which if you were with me the past few webinars, I did explain about that. I'm happy to do it again a little bit later on. The listing agent or the seller's realtor. So when the seller decides they're going to list their home for sale, they meet with a realtor. The seller and the realtor come up with the price they consider to be fair market value of the home, or what they think the home is going to sell for, and the listing agent is the one who places it on the market. In attorney states, you're going to have your attorney. The credit union or lender will have their attorney. The seller will have their attorney. In a non-attorney states, a lot of these things are handled by settlement agent or a title company. So depending upon what state you're in, there could be a lot more people than you thought there were going to be. Title company. The title company, they're responsible for finding any issues that could arise when transferring the title of the property. Excuse me. About that, allergies. The title company, they research the history of your home since it became a titled deed to make sure that there are no liens or encumbrances on it. The settlement agent, it's their job to do the actual paperwork and transferring the ownership of the land or of the home. The home inspector is somebody that you, the buyer, will contract with to go in and check out the house, the soundness of the home. And we're going to get into a little bit more depth as we go along. The appraiser is who the lending institution uses to place a monetary value on the property based on condition, neighborhood, and other attributes. Your final who is your mortgage loan officer. To me, and of course, I'm picky, your mortgage loan officer should be the first call that you make, because we're going to be with you from start to finish. We're going to pre-qualify you. We're going to walk you through any credit things that you may have, any questions that you have. We're going to help you or suggest budgeting advice to save up for down payment and closing costs. So our job and our role really is to just get you from point A to the getting the keys to the home. Pre-approval, we touched upon this in a couple of webinars ago, but it's always good to bring it back to light. So pre-approval is a very necessary tool in the process. It means that your financial, credit, and asset information has been reviewed and verified by a mortgage underwriter, so that when we issue you a pre-approval letter, the underwriter has already deemed you credit worthy or mortgage worthy. A pre-qualification, we have no verification of anything. We have not looked at any of your documents. So while it's a tool, it's not as strong a tool as a pre-approval. Once you're pre-approved, that's when it's time to start looking for homes, because you're going to know exactly how much home you can afford. And by that, I mean, you're going to know what your purchase price can be and what your loan amount is going to be. In the previous webinar, we have the Home Advantage program. These realtors give back 20% of their commission to our members as a rebate at closing at most states. There are a couple of states that won't allow the rebate to be given at closing, so members receive a check within 45 days after closing. So I just want to talk about this for a minute. I'm going to use round numbers and small numbers because it's late in the day and I'm doing this off the top of my head. So let's say the seller and the listing agent, because remember, they're the two people that come up with the sale price of the home. So let's say they say the sale price of the home is going to be $200,000. And then the seller says to the realtor, I will pay you, because the seller pays the realtor, I will offer you a 5% commission on the sale of the home. That's $10,000. But remember, we have a listing agent, which is the seller's realtor, and then we have the selling agent or the buyer's agent. So that $10,000 is split between two. So it's $5,000 for the listing agent, $5,000 for the selling agent, and you would get 20% of the selling agent's commission if you were to use a Home Advantage realtor, and that would be $1,000. That's not bad. That pays for your appraisal and a couple other fees. So it's really not a bad deal at all. And again, I use small dollar amount because it's easy math for me to do off the top of my head. And that's something that you can talk to your loan officer about. We're happy to point you in the right direction. Once you choose your realtor, and we can give you several names of realtors that participate in the Home Advantage program in your desired location, interview them. This person is going to sell you your dream home. You should be happy and comfortable with them. We've had many members come back to us and say, hey, listen, you referred so-and-so to me. I really, I don't feel comfortable, or they're always kind of rushed, or whatever it may be. That's not wrong. You have to feel comfortable, and we want you to feel comfortable. So we interview the realtors. We can give you several names and you can interview them all. Once you do that, once you choose the realtor you feel comfortable with, you should have a really good idea of what you want in a home. And by that, I mean, how many bedrooms are a necessity? How many bathrooms are a necessity, right? A pool would be great, but is it a necessity, right? You really have to think about that. Are you a commuter? Do you want to live in a town that has a train station? What is the school district that you want to be in? These are great things to have already predetermined as you sit down to work with your realtor. The realtor is going to take you out, look at homes. Once you found a home, what happens next? So now I know from my own experience, this was when the butterflies started to show up in my stomach. It was very exciting, the looking at the different homes. But then when we settled upon one, it got real. It got real really quick. you'll work with your realtor to draw up an offer. So you don't go in, okay, let me step back. In this particular market, because there's such a lack of inventory out there, I'm not going to say all deals because that would be wrong, but a lot of the deals are getting offers of asking price or higher. Now, remember that pre-approval document, you're going to know your max qualifying power, your max lending power. So you have to be real careful with this because it's a very emotional process. So when you come up with an offer, the realtor will go to the listing agent and they will present your offer. The listing agent takes it to the seller. They have three options, the seller. They can accept, they can decline, or they can counter. And this can become a negotiation in some, in some circumstances. It doesn't always. And this market, honestly, I can tell you from what the members are coming back and telling us, it's highest and best offer by 5 o'clock today, by 5 o'clock, whatever day. And I will tell you that I just heard from a member today. She's been looking for a really long time, over 9 months. She's been looking for a home. There was a house that went on the market. It had 42 offers in day one, 42 offers. And that house sold well above asking price because people got into a bidding war. Now, there's risks associated with bidding wars. Really listen to your realtor and take their advice as to what they think. And you have to know your pocketbook, right? Because it's very emotional. You get attached to a home, you want to buy it, but maybe you can't go up to that asking price because as the lender, we're going to lend based on contract price or appraised value, whichever is lower. So if somebody makes an offer and that offer goes above list price and the appraisal comes back at list price, those people have to shell out those additional funds out of their own pocket. So it's very confusing, it's very nerve-wracking, and it's a very dangerous spot to be in if you're working with a finite budget. Let's be optimistic and let's say you and the seller agree upon a price and you get an accepted offer. The realtor in New Jersey, and I'm basing this on New Jersey because that's where we're based. The New Jersey, the realtor will draw up the contract. If you're in New York, and your attorney will draw up the contracts. Either North Carolina, South Carolina, or both of them, the title company draws up the offer, or the realtor will. So it really depends on where you're purchasing. Once you have an accepted offer, you're going to sign your contract, present your earnest money deposit. Your attorney will then forward it to the seller's attorney. Again, I'm basing this on New Jersey. The seller will sign it, and then you'll get a fully executed contract of sale. That's when you have to give to your mortgage loan officer. You must contact your loan officer and give them the fully executed contract of sale. Once we get that signed by all parties, then we turn your pre-approval into an actual loan. What's in the contract? The address of the property, the legal description, the purchase price, how much you're going to put down, earnest money. Sometimes they want $1,000 upon contract signing, and then 5 days later, they want an additional sum. Sometimes the $1,000 of contract signing is enough. It depends on what you work out with your seller or what the two realtors decide. There'll be a stipulation about title that the seller will provide clear title at closing. Well, what's next? So while you're in New Jersey, the contracts go into attorney review. In New York, once you sign, you're signed. You're going to order your home inspection, and the realtor is going to guide you, and your attorney will guide you. In New York, we do the home inspection prior to contract signing. In New Jersey, you sign the contract, it goes into attorney review, and then you do your home inspection. So it really does depend on where you're purchasing your home. Inspector, he goes in or she goes in, and they look for potential problems that will affect you, the buyer. So again, depending on your state, is when you're going to order it. What does he look for? he looks at he or she, I'm using he because that's easy for me, but he or she will look at the electrical panel to make sure everything's up to code. He's going to look at the foundation to see if there are any cracks inside, outside, if your chimney is leaning, if the floors are lopsided. They'll look at the furnace. Some of them even look at the water heater to see when it was put in. Plumbing, water stains, corrosion, mold. I mean, there's a myriad of things that they look for. Once you receive your inspection report, let me step back a minute. Prior to this market, okay, so about 2 years ago, after you had your home inspection and say there were a couple of things on it that you wanted taken care of, you could go back to the seller and say, hey, I want X, Y, and Z fixed or addressed prior to closing. In this market, and it's a very strange market, everyone, in this market, many people are waiving the home inspection. That's your choice. What cannot be waived ever is the septic inspection. So if you're purchasing a home with a septic tank or well water, we're going to want to see the well and septic, because that's a very dangerous thing to waive, because the septic is addressing waste and we have to make sure that that's functioning. Okay. So in a normal market, you have negotiating room with the seller for the home inspection if anything pops up. In this market, really most of the homes are being sold as is and they're waiving the inspection. That doesn't mean you don't do it. You don't do the home inspection. It just means that the seller's not going to fix anything on it, but you as the buyer should be aware if there are any issues. Once you have your contract and you provided it to the loan officer, as I stated, we're going to put your loan from a pre-approval to a actual loan. We're going to ask for any updated documentation that we might need. So we might need an additional pay stub. Maybe we need to see your most recent bank statement. Not a big deal. Not a big deal. Certainly not anything that you can't provide to us. We're going to order the appraisal. So the appraiser, we are not allowed to, by law, we are not allowed to know who the appraiser is, who's going to be appraising your home until after the appraisal is done. For that reason, we work with an appraisal management company. They have a roster of approved appraisers who they will farm the job out to once we provide them the contract of sale. The appraisal looks at the neighborhood, the characteristics. Is it urban? Is it rural? The percentage of land use. Is it a lot of commercial? Are there a lot of multifamily dwellings? What zone? How is it zoned? The lot size? Does the property have well and septic, or is it public sewer and water? The type of driveway surface or any garage, is it one car versus a two? The square footage in your home, number of bedrooms, number of bathrooms, fireplaces and wood stoves. I mean, you can see from the list here, there's a lot that goes into an appraisal. Once we receive your appraisal back, you get a copy, you pay for it, you get a copy of the appraisal. We're going to resubmit your file to underwriting because you were pre-approved. You, the purchaser, were pre-approved. But the home also has to meet our guidelines. So the underwriter will review your documentation, any updated pay stubs or bank statements we supplied. They're going to they read the appraisal in its entirety. You do not have to supply us with your home inspection. That's yours and yours alone. The septic inspection, well inspection, we are going to need those. They're going to just reconfirm your credit, income, assets, and then we're going to issue your commitment, which is your formal commitment letter from the credit union saying that you're an approved for a mortgage subject to. Typical conditions are, not limited to, but typically the conditions on your commitment are your homeowner's insurance, which you can't get until we know you have a firm closing date. The title insurance, which your attorney's not going to order until you have your commitment. In some circumstances, we need a survey on the property, which determines the meets and bounds of your lot line. You're going to provide your commitment to your attorney. to the title company or realtor, depending upon what state you're in. The conditions on the commitment must be satisfied before we can receive a clear to close. That is what every buyer, those 3 words, or what every buyer wants to hear, and every seller wants to hear, that their buyer is clear to close. Your lender is always going to require homeowners insurance. We'll tell you how much you need in coverage. It provides replacement to repair or replace in the home of fire, flood. If you're in a flood zone, you're going to be required to get flood insurance. And the insurance will be paid through your mortgage. So you'll pay the first year up front, and then we'll pay your insurance every year thereafter. Title insurance, your attorney is going to order that in an attorney state. If you're in a state that doesn't use attorneys, usually the realtor or the settlement agent will order that for you. The title insurance protects you for however long you own that property, that you had free and clear title to that property when you purchased the home. So nobody can lay claim to it. You're also going to get an owner's policy. The owner's policy, you only have to purchase once. It's substantially cheaper than the lender's policy. Don't ask me why. I don't know that. I don't know the answer to that. But that policy stays with you for however long you own the home. If you were to refinance your mortgage somewhere down the line, and we talked about this in the previous webinar, if you were to refinance, you would have to get a new title policy for the lender, never for the owner. Oh, and I just covered that, sorry. So this is a survey. The survey draws out the property lines. It's certified to you, the buyer. Sometimes they're certified to the lender. It shows the location of your driveway, the dimensions of the property, any decks or fences. If there's an existing survey on the property that you're purchasing and the title company will endorse it, and it's less than 10 years old, you don't have to do a new survey. If it's over 10 years old, in certain states, we're going to require a new survey. New Jersey being one of those states. And again, I just covered this. I'm sorry. If you've been with me, you know I tend to jump ahead. I do apologize. But you're getting these slides. They'll be sent out tomorrow, so you'll have all this at your fingertips. So you're almost done. I promise you. It seems like a lot. Getting the pre-approval actually takes a lot of the stress and worry away, because you're not trying to compile all this paperwork at once. Once we have your conditions on your commitment, right? So if it's the homeowner's insurance, the title policy, let's just say you needed a survey and you provide all that to your loan officer, we're going to resubmit to the underwriter, and they're going to issue the words everyone wants to hear, clear to close. Once you receive the clear to close, things really start moving fast, everyone. It really feels like in the blink of an eye. Once you're clear to close, your attorney, realtor, title company, again, depending on where you are going to work to get your closing date established and scheduled. You'll be issued a closing disclosure with the numbers for your purchase. The initial closing disclosure will most likely need to be finalized. Okay, so the law says we have to issue a closing disclosure 3 days prior to closing, but 3 days prior to closing is not enough time. So we issue an initial one, because the one that's 3 days prior to closing needs to have all final numbers. But we're not setting your closing date, today and then closing you next Monday. It's not enough time to issue the numbers. We wait from the title companies to give us some. So we issue you a preliminary closing disclosure. It'll have some numbers on it, won't have all. Once we have your closing date and we get the numbers from the title company, taxes due, any water bill that's due, like all of this stuff has to be obtained. Then we'll issue you your final closing disclosure. So it's just a little bit extra paperwork, not anything to be concerned about. But then you can get your closing scheduled. Once we issue the preliminary, we can schedule your closing and then work on obtaining those final numbers for you. The closing is the final step in your journey. Everything you work so hard for is just within reach. Once we have the date and time of the closing, your attorney It's going to inform you of any dollars you need to bring to the closing. In most cases, they're going to ask for a bank check. A lot of times now, you can actually wire the funds to your attorney's escrow account, and he can cut the checks from that. So it depends on your attorney or title company. Pre-COVID, these are the people that were at the closing, and sometimes now still. Depending on where you are, because we do lend in all 50 states. If you're local to New Jersey, New York, Connecticut, and you're closing, your loan officer sometimes tries to attend. Certainly your realtor is going to want to be there. The seller may sign their documents prior to, and it could just be you and your attorney at your closing. It really honestly just depends. The closing day is the big day. So either day of closing or the day before closing, you're going to do a walkthrough of your new home. You're going to make sure the home in the contract, it's going to state that the home has to be broom swept and in clean condition. So that's what you're checking for, right? That they didn't leave any debris or furniture, and that they've swept out the house. Once you've done this, the walkthrough, you can either go right to your attorney's office to close, or you're going to close the next day. It just depends on what you decide upon with your attorney. At the closing, you're going to be getting a ton of documents to sign. There's a lot of documents, everyone. Get your hand in shape because it gets tired. Your attorney is going to be there. He's going to explain them to you. The title company is going to be there because they're going to record the mortgage and the deed for you. When you sign your last document, the transfer of title is conducted, the keys will be handed over, and congratulations, you're now a homeowner. Here's the link to reach out to a mortgage loan officer. With that, I'm going to open the floor for any questions.
Fantastic. Thank you so much, Carolyn, for such great presentation. Yes, at this time, we would like to open up the floor for any questions you may have. As you guys are aware, Carolyn has been in the mortgage industry for over 35 years. So she has wealth of knowledge, and now is the time to ask your questions. Of course, if you think of a question that you came to your head after this webinar has finished, you can always reach out to me or to Carolyn directly and ask the question via email. We'll be more than happy to answer those.
Close your eyes. I'm going to go back to my email address just so that you can have it one more time. I'm happy to answer anything. I answer every email same day or the very next day, depending upon when it comes in.
Fantastic. Very good. And also just a reminder that this webinar is being recorded. So if you got here late, or perhaps you want to rewatch the presentation because you missed the concept, or you want to revisit, you're more than welcome to do so. Just please be on the lookout for the follow-up email that will be arriving to your inbox in tomorrow, if latest on Friday. Okay. All right. So let's start with the questions now. Does Affinity provide mortgages in Pennsylvania?
Absolutely, all 50 states.
Fantastic. Very good. I'll give it another minute or so for other questions to be asked. And since one's so far the first one that has been asked so far. Also, don't forget about next week's part 4. So that kind of like closes and brings all of the home buying process, closes the circle. And just remember that if you register for any one of the parts, you do not need to register again. You will receive the invitation and the reminders 24 hours before, and then an hour before the webinar, just so you are aware when to join. Okay, so you don't miss that great information. Next week we'll be talking about credit, so what's needed credit wise in order for us to start our home buying journey. All right. Question just came through. Does Affinity participate in New Jersey program for new home buyers?
I don't understand the question. Is it a low to moderate income or a down payment assistance? If that's the question, then we have a gentleman, James Goodman, who handles all of that for us.
Fantastic. Thank you so much. And then next, does Affinity mainly do FHA home loans?
We don't do any FHA home loans. All our loans are conventional.
Okay, very good. And I guess if this person was interested in finding out more about, like, I guess the down payment,
You can email me and I'll happily provide you with James's contact information.
fantastic. Good. Yes. All right. Very good. All right. I don't see any other questions right now. Or let's give it another 30 seconds or so. All right. Next question. Generally, how much of a deposit is needed to waive a bank appraisal?
So we don't waive an appraisal ever. I know that Fannie Mae was offering appraisal waivers at one point. I honestly don't know if they're still doing them. And it really wasn't based upon your down payment. It was kind of based on their penetration in a certain area. So if I'm just going to use a town in New Jersey off the top of my head. So let's say Oakland, New Jersey, they had a cluster of homes in that area. And you were purchasing in Oakland, they might say, okay, well, we know this area, we know the value, you don't have to do a waiver. I don't know that they're doing those anymore. But for us, we don't ever waive an appraisal.
Okay, great. Next, do you have down payment assistance for Arizona?
We, the credit union, don't offer down payment assistance. We work with organizations that do. I don't know if James has any contacts in Arizona, but if you want to shoot me an email, I can ask him, or he can maybe point us in the direction of how you could find out about them.
Okay, excellent. Next, my credit score fluctuates. When does the credit score get pulled? Let's say within 30 or 60 days, the credit score goes up. Will Affinity consider the new number or the original score when it was pulled?
No, we're not going to repull your credit. Credit is good for 120 days. So whatever day we pull it on, that's the credit score we're going to go by.
Okay, very
So
good.
original score, the date it was pulled.
Fantastic. All right. Next, what is the current interest rate for a conventional loan?
I can give you a range of rates, but interest rates are based upon loan to value, credit score, and other factors. So everybody's different. But I can tell you that I pulled rates today on a 750 credit score, 3% down. And the range was, God, the range was, and if you can email me, I can run your particular scenario, but the range was 6.875 to 7.25. So I really would rather run your particular scenario to give you a better answer than that.
Okay, next, in a bidding war, if I go over the asking price, let's say by 50K, will I have to pay that out of my pocket or that can be included in the mortgage?
That you must pay that out of pocket. Remember when I said we're going to lend appraised value or contract price, whichever is lower. And I'm going to tell you, on a lot of these bidding wars, it's coming in, the appraised value is coming in at the original asking price, and in some circumstances, even a little bit lower than that. So anything over appraisal, you have to put in out of your own pocket.
And then very, very good. All right, so I don't see any other questions at this point. So I'll give it another 30 seconds or so for another for your questions. Your questions, guys, are great. And this is what we're here for. Carolyn is more than happy to answer any question because I know that the home buying process, and it happened when I bought my own house. There's a lot. It's overwhelming, and there's a lot of questions. So we're more than happy to address any of the questions that any of you may have.
But again, that's why I keep my email up there for you. If you wanna have a conversation, I'm happy to do that. Shoot me an email, we'll schedule a time. If you want to ask me a question or you think of one after this webinar is over, I'm always around and I answer and respond to every single email. So please, you're not bothering me. I'm happy to talk to you.
All right, very good. So I don't see any other questions at this moment, Carolyn. So I would like to bring this webinar to a close. I want to thank everyone who attended. There's still 32 people of you still here and still all the way to the end of the webinar. So I really thank you for staying behind. I also want to make sure that don't forget about part 4 next week, same day on Wednesday, same time at 6 p.m. And you guys will get reminders of the last part coming up next week. Okay. With that said, Carolyn, do you have any parting words?
Thanks for attending, everybody. I hope to hear from you and I hope to see you next week.
Fantastic. Thank you so much, Carolyn. And thank you, everybody. You guys have a wonderful evening. And don't forget, next week will be part 4. Have a great evening and enjoy. Bye-bye, guys.